This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
Now we'll look at question 2 of section B from the paper F5 specimen paper. As always, read the requirements first, then we know where we're going, what we're trying to do. Part A, construct a payoff table to show all the possible profit outcomes. Part B, determine the level of cement production the company should choose based on the decision rule of maximin. Show your calculations clearly and justify your decision. Well, again, having read the requirement, it should be immediately obvious that this is decision making under uncertainty. There's various things she could have asked. She asked for maximin, she could have asked for minimax regret, maximax, expected values. But whichever she was asking, always part A is this payoff table showing all the various profits we could make. So now let's read, see what's happening. Cement Co. is a company specialising in the manufacture of cement, a product used in the building industry. The company's found that when weather conditions are good, the demand for cement increases since more building work is able to take place. We're now trying to work out the level of cement production for the coming year in order to maximise profits. The companies received the following estimates about the probable weather conditions and corresponding demand levels. So the weather might be good, average or poor with those probabilities, and the demand. Well, there's the demand in number of bags, depending on the weather. Each bag of cement sells for $9 and costs $4 to make. If demand is unsold at the end of the year, it has to be disposed of at a cost of 50 cents a bag. They've decided to produce at one of the 3 levels of production to match forecast demand. And we have to decide which level of cement production to select. All right, now part A wants the payoff table. How you set up the table is up to you. People are always asking about which should be rows, which should be columns. It doesn't matter at all as long as you're making it clear. I'll do it the way I do in my lectures. If you want to set it up differently, fine. But as I say, however you set it up, just make sure it's clear. What I do is down the side, I show what it is we have to decide, what our choices are. And along the top, I show whatever it is that's uncertain. And make sure you sort them out properly. You see, here, I think it's very clear. What is it that we have to decide? It says so in the very last sentence of the question. What level of production to select? And in the previous sentence, it says we've decided to produce at one of the 3 levels to match demand. So we're either going to produce 350,000 bags, or we're going to produce 280,000, or it'll be 200,000. It'll be one of those 3. Ultimately, we have to decide which is best. What is it that's uncertain? Well, the uncertain one is the one that we're given probabilities for always. And here, it's the weather and therefore the demand that's uncertain. The demand will either be, if there's good weather, it'll be 350,000 bags. If it's average weather, it'll be 280,000. If it's poor weather, it'll be 200,000. And so in total, there are 9 possible profits could result depending on how many we decide to produce and what the demand turns out to be because of the weather. And our job now is to go through and cost them all. Let's do it. I'll do this first and do this in the exam. I'm not going to show the work. I never do show the workings for all 9 because it does end up being very repetitive. That's your choice, but I think some of them I can do on my calculator. But always show the workings for a few of them. Then it's clear to the marker you know what you're doing, even if, again, you make some silly arithmetic mistakes. Arithmetic mistakes are just half a mark here and there. Anyway, A. I'm looking to see what happens if we produce 350 and we sell at 350. Well, if we produce 350 and sell 350, we sell them all, 350,000 sold. And how much profit do we make? Every bag sells for 9 and costs 4. And so we'll make $5 a bag, and on 350,000 bags, that gives us 1,750,000. And don't waste time writing 000 all the time. It's your choice, but it's silly. So no problem. What about B? B is when we produce 350, but we only sell 280. Well, on those we sell, no problem. We sell 280,000. We make $5 on each bag, as we had before. A profit of 1.4 million. But remember, if we've produced 350,000, that leaves 70,000, which we can't sell. And it says, any that are unsold, second sentence below the table, if cement is unsold at the end of the year, it has to be disposed of at a cost of 50 cents a bag. So on those that we have to dispose, well, first of all, it's cost us $4 to make it. In addition, we're having to pay 50 cents to dispose of it. And so it costs us $4.50 on each of them. Now you can see your costings differently by all means, but I hope you see what I've done. If you sell any, you make $5 profit. Any you don't sell, you've no revenue, you've a cost of making of $4, and in addition, the cost of disposing of 50 cents. So, on those 70,000, we lose 315,000, which means we end up with a profit of 1,400. I get 1085. Well, again, on the table, don't put all the thousands in. You're silly. Let me just show the workings for 2 more. What about this one? We produce 350, but here we only sell 200. So on what we sell, as always, we make $5 a unit profit, so a total of $1 million. But on those that are unsold, well, again, we produce 350. This time, 150,000 aren't sold, and any unsold, it's costing us, we're losing $4.50. 150,000, $4.50. 675,000, which leaves us with $325,000. All right, I'll show full workings for just one more. D. Reference your workings like I'm doing. Because now it is starting, I hope you agree, if you've understood me so far, it's starting to get very mechanical, very repetitive. It's from now on, it's just speed and being careful. But do watch this, that here we're producing 280,000. Now demand is 350,000. But if we only made 280, we can only sell 280. And there's going to be none unsold. And so, you sell 280,000, you cannot sell more than you produce. On every one sold we make $5. And therefore, 1.4 million. Easy. Provided you've understood the question, obviously. But for I think the third time, you can never sell more than you produce. Produce 280, we'll sell 280. The other customers we just turn away. No revenue, no cost. There we are. And surely, because of that, I can do the next one as well. It's the same workings. Here we produce 280. We sell 280. I'm not going to write the workings down again. We make 1,400. I said I wouldn't show more workings. I'll show one last one, and you'll see why. I really need to do one more. That F, we produce 280, and demand is only 200. Well, if demand's 200, we only sell 200. $5 each is $1 million. But since we produced 280 and only sold 200, the other 80,000 are unsold. And without me repeating the reasons, on every one we don't sell, we end up losing $4.50. We end up with a profit of 640,000. All right, well, I think I've gone far enough, because if you've understood me so far, the remaining three I can actually write straight down. That if you produce 200,000, the most you can sell is 200,000. And so whatever the demand is, whether it's 200, 280 or 350, you can't sell more than the 200 you made. You will sell all 200. Any extra customers and extra demand is turned away. And so since they're all at least 200, whatever the demand turns out to be, we'll make $5 each on the 200,000 produced. It'll be 1,000. So it takes a few minutes, but again, it's taken me longer because I've been talking through it. If I wasn't talking, it would be a lot quicker. And take the time to sort out what's happening, because once you've sorted out, you know, that it's $5 on every one you sell, it's losing $4.50 on every one you don't. Once you've sorted that out, then it is repetitive and it's just speed on your calculator. But do show some workings do. The markers are desperate to give you marks, even if it's wrong, if it seems you know what you're doing. But if they can't see what you're doing and you don't get the right answer, it's hard for them to give you any marks at all. I'm doing my workings exactly as I would in the exam. I think it looks quite, you may not agree, but I think it looks quite pretty. Finally, though, part B. Determine the level of cement production the company should choose based on the decision rule of maximin. Show your calculations clearly and justify your decision. All right, part B. Maximin. Now, as I made clear in the lecture, I mean, obviously learned the rule, but when it comes to it, it doesn't only want to know the answer, it says justify your decision. It's up to you whether you write a mini essay, or I would do what I'm about to do, which I think makes it clear. With maximin, for each of our choices, which here is the level of production, we've got three choices: 350 bags, 280 or 200. 350, or was it 280 and 200? For each of the choices, we identify the worst outcome and the worst outcome, well, since we're looking here at the profits on that table, the worst outcome is in each case the minimum profit. So if we go for 350,000 bags, the profit is either going to be 1750, 1085 or 325. The worst possible outcome is 325, the minimum. Similarly, if we chose 280, the worst outcome, well, it's either 1400 or 640. Well, the worst is 640,000. And finally, if we go for 200,000 production, well, of course, the profit's the same, whatever. The worst we can get is 1 million. So in each case, there's the worst that can possibly happen. If we're using maximin to decide which one we'll go for, we take the best of those worst outcomes, the best of the worst, or the maximum. So the highest of them is 200,000. Therefore, we'll produce 200,000. The justification is that the minimum we can, the worst profit, the lowest profit, is 1 million. We cannot earn less. And finally, I would write down, even though I don't think it's actually needed here, but it only takes a second. You should know from watching the lectures that maximin, making a decision on this basis, it's a risk-avoid approach. We could get more profit if we'd have gone for one of the other levels, but we'd be taking the risk that we could end up with less profit. So that's it for number 2.